Hey, I'm Andrew from Blue Hat Bookkeeping. What if I told you there's a way to legally grow your wealth tax-free, even if you earn too much to contribute directly to a Roth IRA? It's called the Backdoor Roth IRA, and it's one of the most powerful tax strategies for high-income earners. And if you think the Backdoor Roth IRA is just for small investors, think again. Billionaire Peter Thiel turned $2,000 into $5 billion tax-free inside his Roth IRA. But here's the secret. He used a self-directed Roth IRA to make it happen. In this video, I'll break down how to execute a backdoor Roth IRA conversion, how taxation works, how to avoid IRS penalties, and why you should use a self-directed Roth IRA to maximize your investments. Why a backdoor Roth IRA? The Roth IRA is one of the most powerful investment accounts because all qualified withdrawals are 100% tax-free. 2, however, high-income earners are locked out. You cannot contribute directly to a Roth IRA if your income is above the IRS limit. 3, but successful investors don't take no for an answer. That's where the backdoor Roth IRA comes in. Single filers, phase-out starts at $150,000, ineligible above $165,000. Married filing jointly, phase-out starts at $236,000, ineligible above $246,000. If your income exceeds these limits, the backdoor Roth IRA is your way in. The backdoor Roth IRA, step-by-step execution and taxation. Step 1. Open and fund a traditional IRA. Open a traditional IRA and contribute the maximum allowed $7,000 for 2024 or $8,000 if age 50 plus. Important, ensure you contribute non-deductible after-tax dollars if you are not eligible for a tax deduction. Step 2, convert the traditional IRA to a Roth IRA. Once your funds are in the traditional IRA, convert the full amount to a Roth IRA. This is the backdoor move. Since the IRS doesn't restrict Roth conversions based on income, this method allows high earners to legally build tax-free wealth. Step 3, report the conversion on your taxes. The key tax rule: if your traditional IRA was funded with non-deductible contributions, you should owe little to no taxes on conversion. If you had pre-tax contributions in a traditional IRA, you will owe income tax on the converted amount. IRS Form 8606 must be filed to track this properly. Step 4, follow the IRS timing rules. Convert quickly. The best practice is to convert to a Roth IRA as soon as possible after funding the traditional IRA. Why? The IRS taxes any earnings made in the traditional IRA before conversion. Time limit: the conversion must be completed before December 31st of the tax year to count for that year. Step 5, convert it to a self-directed Roth IRA, a game changer. Most people stop here and invest in stocks and mutual funds. But if you want true wealth building, you should transfer your Roth IRA into a self-directed Roth IRA. Why you should use a self-directed Roth IRA? The wealthy don't just invest in stocks, they invest in opportunities. What a self-directed Roth IRA lets you invest in: real estate, rental properties, fix and flips, private businesses like early-stage startups, cryptocurrency, Bitcoin, Ethereum, etc., gold and precious metals, private lending and notes. Why this matters: 1, tax-free growth on alternative investments. Imagine buying a rental property inside a Roth IRA, letting it appreciate, and then selling it tax-free. 2, higher returns than stocks alone. Peter Thiel didn't get rich off index funds. He used a self-directed Roth IRA to buy startup shares at pennies on the dollar. 3, more control over your investments. Instead of relying on Wall Street, you get to choose where your money goes. Pro tip: if you're serious about using a Roth IRA for real estate or private deals, a self-directed Roth IRA is a must-have. Warning: SDIRA has come with IRS rules. You cannot invest in your own business or buy real estate you personally live in. Violating these rules can destroy your IRA's tax advantages. Peter Thiel's $5 billion Roth IRA the ultimate case study. How Peter Thiel used a Roth IRA to build a $5 billion tax-free fortune. In the 1990s, Thiel invested just $2,000 into a self-directed Roth IRA. He used the Roth IRA to buy PayPal shares at a few cents per share when the company was a startup. Over time, PayPal exploded in value, and his Roth IRA ballooned to $5 billion. Because Roth IRA withdrawals are tax-free, Thiel will never pay a dime in taxes on his gains. Important takeaway for investors. The key to Thiel's success was investing in high-growth assets within a Roth IRA. While most people buy stocks and ETFs, you can use a self-directed Roth IRA to invest in startups, real estate, and private equity, just like the wealthy do. Mega Backdoor Roth IRA. Supercharge your contributions. If you're a high achiever, you don't settle for average. You want to maximize every opportunity. The Mega Backdoor Roth IRA lets you go way beyond normal limits and supercharge your tax-free wealth. How it works. 1. Max out $401k after-tax contributions beyond standard limits. 2. Roll over those after-tax funds into a Roth IRA or Roth 401k. 3. Now, you've just moved tens of thousands of dollars into a tax-free zone. Why this matters? Most people think Roth IRAs have small contribution limits. The Mega Backdoor Roth IRA breaks those limits wide open, allowing you to stash away up to $70,000 tax-free per year. Common mistakes and IRS penalties to avoid. 1. Forgetting to report on Form 8606. This form tracks non-deductible IRA contributions and ensures you don't pay double taxes on conversion. 2. Accidentally taking a distribution instead of a conversion. If you withdraw funds instead of doing a proper transfer, you could trigger a 10% early withdrawal penalty if under 59.5. 3. Delaying the conversion too long. If you earn interest or capital gains in the traditional IRA before conversion, you'll owe taxes on those gains. Take advantage of the backdoor and self-directed Roth IRA today. The backdoor Roth IRA is one of the most powerful tax strategies for high-income earners if done correctly. But if you want to truly maximize your wealth, a self-directed Roth IRA opens the door to high-growth, tax-free investing beyond just stocks and ETFs. Here's what to do next. Like this video if you found value today. Subscribe to our channel for more tax-saving and wealth-building strategies. Comment below with your biggest question about Roth IRA conversions. Need expert help? Contact Blue Hat Bookkeeping for a personalized tax strategy session.